Today is Tuesday, July 19th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services, Archer Financial Services, or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Dennis Smith, Archer Financial Services Senior Livestock Analyst. Starting with the livestock markets this morning, Dennis, what is your outlook for live cattle prices?
We're looking for the market to move higher eventually. We've got a strange situation in which cash steer prices trading in 136 to 138 in the southern plains, but cash steer prices in the north are as high as 145, some areas as high as 150. It's a record wide range between the two areas. Feedlots in the north are current. Feedlots, especially in Texas, not quite there yet. The grading is much better for cattle in the north. So it's a strange situation. Eventually, all feedlots should get current. We're looking at production to begin to drop off, certainly by the fourth quarter. And it's going to drop off rather dramatically. And next year, the beef production will be nosediving. So we're bullish right now, Kurt, sort of waiting for the leverage to begin to shift as the feedlots get more current.
Dennis, what about the hog prices? The market is testing key resistance levels recently. Will they hold?
Well, futures are testing resistance in the current market activity. August hogs actually took out some resistance yesterday as they were able to close just above 112. The market's discount and trying to play catch up with the cash and with the index. And the market's technically starting to improve with open interest increasing on the strength in the marketplace. There's some concerns in the hog market. First of all, this is not a good time of year for meat consumption, red meat consumption, as the heat of July moves into the heat of August. But the market is anticipating future events as the markets are designed to do. If you get China coming back into the U.S. pork market this fall, which I think is very possible, you should have a real good, strong hog market into the fourth quarter.
Dennis, shifting away from livestock and looking at the greater economy, how about recession? Are you in the recession camp?
Yeah, you know what, Kurt? I am not in the recession camp. The U.S. economy is still creating jobs. We still have unfilled positions. We still have an unemployment rate near a 50-year low. We've never had a recession in the United States in which unemployment rate did not increase substantially. Now, perhaps there will be a recession next year. Maybe not till the second half of next year. If we're in recession right now, I would consider it an extremely mild recession, and we'll come right back out of it. So basically, I am not in the recession camp.
Thank you, Dennis. Steve, let's look at the grains. Grain prices are lower this morning. Why, and do you feel like we're near a bottom in these markets?
Well, I think that each day we see different headlines. Our volume is down, our open interest is down, and so it makes volatility really strong when news comes out. Corn's down 20 cents. Maybe the news would normally be like 3 or 5 cents lower. I think today the market is concerned about China with a lot of data showing that as much as 17% of their population is in lockdown, and you're seeing the banks banning withdrawals, and that their real estate industry is a financial crisis. And so China is not a buyer of commodities right now, which is negative. I think some people are worried about economies in South America and economies in North Africa and the economies in Europe, and all those things, plus the recent rally in the dollar is negative to commodities. I think we're trying to make bottoms in these markets. Farmers not selling cash. The weather over the next 2 weeks should be a little bit drier and warmer than normal. Now today they put in cooler temperatures for next week and maybe some rain in the eastern Corn Belt. But again, our weather guide doesn't feel like these will be heavy soaking rains. And we did see a decline in last week's soybean ratings, and I think that the market's trying to make a bottom. It's just very difficult when you have so much negative commodity news.
Steve, what's the latest concerning Ukraine grain exports? I'm hearing that the Russians are expanding their blockade, in the region.
Well, I think if you ask the commercials, they'll say there's a very small chance that a corridor will be open. I'm sure the UN is optimistic about this, but I think that, first of all, the boats would have to be loaded at a rate of about 60 tons a day, which would take weeks to load. Then they'd have to be escorted out and with mine sweepers. They would have to have somebody give them insurance on these boats, and then Putin would have to agree to allow Ukraine to get money for these sales. And I think that is something that he probably wouldn't do, because they would use that money to buy war supplies. This last week, they started shelling the capital of Ukraine. They're shelling Odessa. They're increasing military activity in the east, and they're burning wheat fields. So none of this would suggest an open corridor for Ukraine exports.
Lastly, Steve, can you review the managed positions in grains and what the current technicals might look like?
Well, I think, first of all, the managed funds is pretty much liquidated out of any long positions in the wheat. They're actually a little bit of short. They've taken most of their soybean oil long positions out. And historically, they have very low soybean and corn positions. I think that back in May, as the stock market started to decline, as oils started to decline, as the Fed talked about higher interest rates, managed funds just took their monies out of hard assets, which included the grains. But yesterday, September soybeans tried to test the 200-day moving average and failed. So it's going to be very difficult right now, unless we have a weather problem, for September beans to trade over $14. In the corn, we didn't even get a chance to test the 200-day moving average, and we're back down to the recent lows, despite the fact that farmers not selling it. Just nobody wants to buy corn. And in the wheat market, I think that there is some talk about some increase in export business, that Europe may have sold out their wheat. Not a lot of Black Sea wheat coming out, but we're still hovering around season lows just because of overall lack of demand for U.S. wheat. And most of the wheat here in the U.S. is being stored, and we've seen a big improvement in our spring wheat crop.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services, Archer Financial Services, or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.